So what do some of these political hotspots like Hong Kong or Argentina mean for investors? Joining us tonight, Jeff Kleintop is back with us. He's Chief Global Investment Strategist at Charles Schwab. Jeff, always good to see you. Thanks for joining us tonight.
Thanks for having me, Bill.
Let me start with Argentina. I mean, I can't tell you the number of analysts who've been on the program who say the emerging markets are a place to look because at some point they've got to come back. But Argentina is a good example of the problems facing the emerging markets right now. Is this as bad as it gets, do you think?
Argentina is a little bit of an isolated case. I know we can look around the world, as Bob just summed up all the issues, but Argentina is kind of a unique factor. It is a long history of political mismanagement and commodity boom and bust cycles that have rendered it a very difficult market. In fact, Argentina was kicked out of the Emerging Markets Index back in 2009 because of former President de Kirchner instituting capital controls. And now one of the developments, of course, in this latest primary surprise that caused the stock market to fall so dramatically was that very same president, now a VP candidate, potentially now looking in a position to win that election and maybe return the country to capital controls. That was the big concern there. Again, this has been a boom and bust economy for a long time, maybe not as representative of the rest of the emerging markets universe.
It's less clear in Hong Kong, is it not, Jeff? I mean, we know the history with Argentina. We don't yet know how the protests in Hong Kong and Hong Kong's relationship with mainland China is going to play out.
Sue, you're right. And this is a much bigger issue for the overall markets and one that seems unlikely to involve troops, military engagement by China coming over the border, but certainly police action. We'll be watching this very closely, not only because it affects Hong Kong and could scare away businesses, could lead to international sanctions and worsen the trade war, and really slow China's economy, which is already growing at the weakest pace in decades, which has impacts for global growth. But it also affects Taiwan. Taiwan has a presidential election coming up on January 11th against a pro-Chinese challenger versus a pro-independence incumbent, and how China deals with the Hong Kong situation could certainly affect Taiwan as well and result in an even bigger global market impact.
Quickly, if we can, on the Middle East, specifically the Strait of Hormuz, the impact on oil. On one hand, you've got a global economy that's slowing down, which means lower demand, which could mean lower prices, but at the same time, you have all the problems going on in the Strait of Hormuz, which could mean a cutoff in supply, which could mean higher prices. What's your view on that and its impact on oil?
Bill, volatility would be my bet on that. I think that's the safest assumption. Look, I think any ship interdiction in the Strait of Hormuz is probably temporary, given the military assets the U.S. has now put there, but also we're seeing from the U.K. and others as well. Japan is considering this also in escorting ships through there to make sure that any blockade is very short-lived and isolated. So we'll have to see, but clearly volatility is probably the safest bet in oil prices, given both upside and downside factors.
Well put. Jeff Kleintop with Charles Schwab. Always good to see you. Thanks.
You bet.